All right, let's take a look at what's happening with the price of oil, which right now, WTI is higher on the session. It was higher yesterday as well. Obviously, the big conversation recently has been tied to the supply story. There have been some suggestions that stockpiles in the U.S. have been building. And then you had that OPEC Plus minister update where there were some production plans put in place for the end of the year. And all of a sudden people said, oh, is that going to change the supply dynamics at a time when maybe demand isn't as strong as some people thought? Now we've got OPEC Plus ministers pushing back on the bearish reaction in the market. Actually, Saudi's energy minister is saying that they could always reverse that plan to perhaps change some of the sentiment. But to better make sense of all of this, let's bring in Eric Nuttall, partner and senior portfolio manager at Ninepoint Partners. Eric, nice to see you. Let's start with the OPEC Plus back and forth and what you've made of the dialogue.
You bet. So the timing of being here is perfect because I want to communicate in the clearest sense possible that the sell-off in oil is completely unjustified using fundamentals, because I think it's rooted in a strong misunderstanding of what came out and what OPEC is trying to achieve. So the concern seems to be that the 8 members who are voluntarily curtailing volumes came out with a roadmap outlining that they would extend the cuts through the next quarter and then beginning in October slowly and gradually bringing those back on. And so I think the market panicked, and largely it's the financial market. We have to remember too, the financial market for oil is 30 to 50 times bigger than the physical market. And so you can get these sell-offs driven by algos and CTAs and such, that you get this breakdown between fundamentals and what is happening on a day-to-day basis. So this misinterpretation is there's this rigid plan to bring on volumes. There's concerns about a weakening economy in the United States and China, et cetera. What the market is missing is this is a roadmap, but it's not etched in stone. The cornerstone of OPEC policy has been to be proactive, preemptive, and precautionary. And so anybody who follows OPEC should have known that this is not a rigid plan. It's subject to market conditions. And frankly, I view it positively because it's a statement on the part of OPEC largely and certain members that they are more optimistic than consensus now is on demand conditions. So you referenced earlier on, yes, we've seen inventories in the United States build. They always do by this time. Globally, we've been drawing down storage when typically we build. And what people don't see coming, and they should, is beginning next week, we're now in the period of time where the draws from global inventories should meaningfully increase. And so I think we're very near an inflection point for sentiment. We were at peak euphoria 2 months ago. Now we're at peak pessimism. And I think it's the draws coming that is going to soon shift sentiment much more bullishly.
What have you learned over the years, though, on navigating that sentiment? Because at the end of the day, people can buy and sell whatever they want, and the chatter can bubble up around like thousands and thousands of different asset classes, right? Like we spend arguably more time than we should on AI, but it's the thing that everybody is talking about. And there's this sort of freight train moving a lot of these stocks higher. Whereas in the crude market, and it almost felt like the Saudi energy minister was sort of speaking to this, there's this bearishness coming at the oil market. That seems like something that's less tangible and not the easiest thing for somebody like you to navigate or know how that plays out? Or do you think you know how that plays out?
It's difficult to manage because there's always a negative bias, I find, towards energy. There's always this desire to be negative because the reality is few people in the world benefit from a rising oil price. It's essentially OPEC, oil companies, and my clients. Everyone else gets hurt. And so you're always kind of fighting that negativity, which often is rooted in ignorance or bad data. And so, you know, I get painted sometimes of being a perma bull. I'm not. There have been times like 2 months ago when we raised a lot of cash because we thought there was too much euphoria. We've been actively deploying that, and we effectively have spent it all. And so I really want to communicate the sell-off over the past few days, we don't think is rooted in reality. What we see coming is global oil inventories today is already near the lowest point in history. Given the draws coming in the next few quarters, what we see is inventories hitting all-time lows, and we see a resumption of the bullish uptrend between 80, we think higher than $90 by the end of this year. And so the sell-off in oil equities, especially I just returned from the RBC Energy Conference in New York, And if it affirmed our belief that the best opportunity available to investors is here in Canada. You meet with shale companies and they'll be like, we've got 6-7 years of inventory. When you can meet with Canadian companies and they say, well, we're going to scale production from 90,000 to 120,000 barrels per day, and we're going to keep it flat there for 25 years, and we're going to give you 75% of all of that free cash flow over that 25-year period. And so the best opportunity set today is here in Canada. The sell-off that we've had has made valuations much more attractive. We've got the sector trading now at a 14% free cash flow yield. You can go out today and buy names at 18, 19, 20, 30% free cash flow yields.
Well, and the performance for the energy sector, to be clear, in this country has easily outpaced the TSX over the last 12 months. It's something like an 18% return. And then to the shareholder religion that you've talked about, yes. I mean, if you do the calculation on total returns, which includes other stuff, including dividends, that kind of thing, it's more like 25%. So that has been a winning sector for investors. But we often hear from the strategists who cover everything, that energy sector performance has to continue to chug along for the Canadian stock market to outperform. And I guess sometimes it feels like energy, just going back to what you're talking about with sentiment, it's like it feels comparable to the conversation around growth versus value or what have you. Like, where is ultimately the buying interest going to come from? So in the same way that you're watching sentiment around oil, what are you seeing when it comes to global awareness of the energy stock opportunity in Canada right now?
I think there is still a profound opportunity because most people do not see what we see. Either they've enjoyed, very few investors, I think, have enjoyed the rise of the past couple of years, and now they're more worried about, losing money as opposed to making money. I think the vast majority of investors globally have completely missed the opportunity because they listened to the ESG nonsense. We're all driving EVs and banning plastic straws, sunset industry, all of the complete nonsense, which we've talked about for years. So there is still a huge opportunity, especially in Canada, because you effectively can still today buy decades worth of free cash flow and get it for nothing. And that's not having to believe in a meaningfully higher oil price from current levels.
So just in terms of action, to wrap up for our audience, you said that you have deployed the capital that you had on the sidelines back into the Canadian energy stocks. Is that what you did recently? How did you do that? Like, what percentage of capital were we talking about putting
We've
back
gone
into
from
the market?
33 to effectively fully invested. We've been selling some natural gas to buy much more beaten up oil names. So without getting name specific, because we remain active even right now, what we're focused on is buying companies trading between 12 and 30% free cash flow yields with decades worth of inventory that are soon or mostly are returning 75 to 100% of that free cash flow back. And again, you can get paid, to your earlier point, 10 to 15% or more per year in total returns. I can't find a better opportunity anywhere else in any other sub-indice or any other market in the world than in the Canadian energy sector today.